Let's move that here. Make that bigger. That up here. There. Turn on the camera. There we go. Good morning, everybody. Good morning. Armulfo, Omar, Vernon, Wayne, Jody, Dave, Samson, Timothy, Glenn, David. Moondog is in the house. Flying Ronin. Dr. Serena, Stacy, Wade, Virtuvian, how are ya? Louis, Richard, Colleen, Richard's in the house. Good morning, Richard. Hope you had a nice break. Mark, Devin, Charlie's here. Gustavo, good morning. Cam and Gustavo logging in together there. That's nice. Jeff, Darren, I hope everybody had a nice weekend. JB, Art, Richard, Mont, Robert, howdy, Mont, Sassy Trainer, Thomas, Jesse, Ray, Stephen, good morning, Stephen. John, David, Deanna, Rice, Ivano, Ricky, Ali, Steve, Idris, Richard, good morning. Wilford, Henry, Edgar, good morning, good morning, good morning, everybody. Let me go ahead and share my my screen because I know you guys didn't come here to look at me all morning. All right, here we go. We got Claire, we got Larry, and if anybody is new here, welcome, welcome, welcome. Eagle Beagle, good morning. I hope you had a nice weekend, nice relaxing weekend. So to start things off, I will be in my VIP room today at noon, regular time. Let me just give you the link for that. And here's the link for Customer Service Live. That's the only two links I have for you. I'm not have nothing to push you guys towards today. Let's see here. Let me just give you the Cam and Gustavo link, and we'll get started right now. Hope everybody had a nice weekend. My wife, as you guys know, she goes skiing with my daughter every year, first week of the year. She's coming back, I think, at midnight tonight. So I've been home alone, analyzing charts all weekend. Santiago, Don, Pops, good morning. Bancroft, Lori, Scott, Lawrence, Willard. Penny, thank you. I appreciate it. Yes, today's 31 years, guys. Today's 31 years that I've been involved in this crazy business we call trading. 31 years. 31 years. By the way, for my VIP room today, let me tell you what I'll be talking about. I'm gonna give you a special session, a special class today within the VIP room of how to increase your win rate. Whether you're a day trader or a swing trader. I thought about making a video, but I think we'll just cut it off and put it into the private members area of the full-time trading class and the pit. This is going to be a premium stuff. This is not going to be just some free stuff, although I'm giving it out for free. So I highly recommend, highly recommend you guys tune in today at noon to the VIP room where I'll be giving you guys a special education, a 31-year anniversary, Uncle Roger's wisdom of how to increase your win rate. Thank you, Ray. Thank you. Plenty of snow. Yeah, plenty of snow. A friend of mine went to Vermont for skiing, said it was great. Brian, good morning. Ooh, 37 degrees. Yeah, yeah. Thank you, Richard. Thank you, guys. Dr. Serena, 50 likes so far. Yeah, post some thumbs up, guys. We should start getting more people here over the next few weeks as people come back from their vacations and holidays. And I'll also be talking about EPS estimates. It's time for earnings. Believe it or not, next week we've got earnings reporting. Good morning, Kevin. Stacy, Michael, Lawrence, Charlie, still a lot of people coming in. Thank you so much. David, yeah, dashboard, the pit, it'll be in there, David. When I say the pit, I usually mean the dashboard. I definitely want to put that in the dashboard. I just confuse the pit with the dashboard all the time. Is without a doubt one system in my book with pit leading. Thank you, Adam. Thank you. All right. Good morning, Robert. Philip, Carlos. Good morning. Yeah, Carlos, today's definitely a day to take notes. Today we'll fill in a lot of the gaps. Well, you didn't have a lot of gaps in your sheet. Actually, you had very few gaps. But this will add a little flavor to it. I promise you. You definitely want to. This will help everybody. I promise. Sometimes things are basic and I forget to talk about them, and then I realize they're pretty important. So I will be talking about that today. All right, so let's talk about the market. It's the first official week of the year, and it's my 31 years of trading. Thank you, Rice. Just got back home from Aruba last night. 12 degrees in Missouri. Ay, ay, ay. That's cold, 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 cold. All right. So the Nasdaq, as you can see here, is up 200 over 200 points. That is significant. That is beyond random. The Dow, kind of not. I would just say let's be a little more cautious on the Dow, but I like what I'm seeing on the Nasdaq, and also, and I'm jumping a little bit right now, but just wanted to show you. Just wanted to show you real quick. By the way, I adjusted my VWAPs. The VWAPs are now. I took away last quarter. I added the year to date right here. I added the. This is the option expiration, the last quadruple witching right here, and this is the election. I still have that. This will start looking a little. I didn't feel the need to have the year-to-date VWAP from 2024 because it was really low. It was near the 200-day moving average, so it wasn't really helping us. Also, I for this year, I made the VWAPs. You could see the dotted lines. All the solid colored lines are moving averages. So that's the 8-day moving average. That's the moving average. That's the moving average. That's the moving average. You see right here, there's a purple VWAP right here. You could barely see it. It goes from this day. That's the New Year's VWAP right here. It's purple. Then you have this VWAP. It's dotted. That's the election VWAP right here. And here's the VWAP that starts at quadruple witching. Okay, 10 trading days. I did, Dave. I was just a little bit of an eager beaver. I had a lot of time this weekend, so I figured I might as well just get it done now. Again, folks, focus on the big things, on the really big things. So right now, and I added the quadruple witching, which the mags right now are slightly above. So I already did it 6 days in. I figured I'd get it done now. Better now than later. You could wait 10 days, David. It won't make much of a difference, maybe for the year to date. But I wanted to add you see, I wanted to, the reason why I did it was because there's a lot of action happening right here. And this is the quadruple witching VWAP. And I thought it was important. So I wanted to add it. And when I added it, I figured I would just do the whole thing over again. So that's kind of where it is. You can wait another couple of days. No, not going to hurt. All right. So there's a couple of things that I like right now, but I wanted to talk about this. But this is definitely not random. As far as Fed data this week, you got some Fed speakers this week. They're really changing their tune. They're going from, yeah, we should buy the kid a really expensive bike to where is that bike, kid? Maybe we should pawn it right now. Yeah, that's where we're at right now. We got JOLTS tomorrow, which is going to reflect on the employment data for Friday. This is the big report of the week right here. The big reports are going to be the job openings, the ADP, and the actual report. These two try to guess this report right here. Now, one thing we need to look at is international trades in goods and services and ISM index. This is going to be important because this impacts manufacturing. And then we have FOMC minutes tomorrow. So we have a full week. We've got a lot of data this week on the table. Okay. Yeah, it makes it easier. I think so too, Debbie. It makes it easier to see them. I'm going to try to do that on all of my other platforms too. So it's easier to see the VWAPs versus the. What I'll do is this: I'll make the short-term exponential moving averages small lines. I'll make the big moving averages big lines, and I'll make the VWAPs dotted lines. How about that? It'll be easier for everybody to see that. Okay. So we have a lot of Fed data today, and the market is getting ready to move. We definitely can move, and volume is coming in. Pretty much everybody that needs to be in the market is starting to come back already. So that's not really, liquidity is not an issue. I'm hoping that this week we're going to see some actual options that have some liquidity. Folks, I couldn't sell a Netflix spread last week, okay? I couldn't sell a Netflix spread last week. It got to a point to that. I mean, can you imagine not having enough liquidity to sell a Netflix spread, Netflix, okay, a mega cap stock. So Matt wouldn't let me do it. The liquidity was that low. All right, so bond market. I warned you last week that the bond market is not turning higher, and I was right, unfortunately. If the bond market turns higher, it's going to give blue chips and small caps and housing stocks and tech stocks some relief. It hasn't happened yet. And even this morning, we're only up a hair. And you could see here, we're below see that one little pink purple dot? That's the election VWAP right there. Excuse me, New Year's, that's the New Year's VWAP. So we're below New Year's VWAP. We're below the quadruple witching VWAP. We're below the election VWAP. Basically, this to me does not look great at all. Now, we could consolidate here, but even if we consolidate, it's not good. Look at how much, this is when they started lowering rates. And remember, bonds going lower means interest rates going higher. Okay? They assumed that they were going to start lowering right here and the bond market was just going to go up from here. And what I was saying was there's not going to be any more speculation in the bond market if they start lowering, which is exactly what happened. And the bond market started trading higher. The long bonds started trading higher. In case you're wondering why your interest rate and your credit card debt is higher, not lower, after the Fed lowered rates 0.75 of a basis point, is because the long bond has been telling the Fed, we don't agree with you. And this is right here. We have not had any reprieve. So I would really love to see some reprieve here, because this channel, this is a consolidation. This is a compression. If this compression breaks down below this level right here, the 86.90 level, we're going to be in a world of hurt. Yeah, Jeff. Yeah, I'm just saying the same thing backwards. I'm looking at the bond instead of yield. So, yeah. And by the way, all of these presidential closings are not good for the stock market. They're really, really bad for the stock market. They're not good. These opens and closings, it's not good at all. Okay? Not good at all. Very bad. It takes the rhythm away from the overnight market. It makes us a lot more jagged. US dollar is taking a big dump. This is really, really good for the bond market. This is really good for the gold market. This is good for the crude oil market, as you could see here. This is deflationary. The US dollar going down is deflationary, okay? So this is going to give us a little bit of a heads up. What I'm concerned about right now is that we're still in an uptrend and that the bond market has not broken higher. There's very, very little. This is important. Pay attention. There's very little the US dollar can do. There's a limit to how much down the US dollar can do with the bond market staying at these levels. Remember, they have an inverse correlation, and gold too. So with the US dollar breaking down a little bit, we could see a little bit of support for the gold, which has been sticking right here. Remember what I told you a lot of times, a major index or something will break a major trend and will stick to the upper part of the trend line and then just start coming back higher. Now, would I do anything with gold? No. We don't have a clear uptrend till we're at 27.85. Okay? So just giving you heads up, we don't have that. Hey, RP. My feeling of this coming year is volatile. Yeah, we're going to have some volatility. Please, folks, hit the thumbs up button if you're enjoying this session, okay? And welcome to my 31st year of trading. 31-year anniversary today. I remember exactly what I did today 31 years ago. Man, I remember the books I was reading. I remember all of it. I remember exactly where I was, all of it. So anyways, gold, we have to break we have to break this VWAP. We have to break the 50-day moving average. We have to break this level right here, which is at 2760. And then when we get to the 2780, we'll be okay. Now, I'm not in a hurry right now with gold, and I'm not really that bullish on gold. I'm actually just kind of neutral. And even T-Bus changed this too, and he thought gold was going to keep going up. Now T-Bus thinks that gold is going to kind of go up slowly. I personally think we're done with the upside till we break 2785, which would then give us a confirmation that we have resumed our uptrend. Yeah, I do. I do love what I do. Thank you, Jeff. I appreciate it. Very, very kind of you. Let me give you a link again. I'll be doing a special session today in the VIP room at noon. It'll be a really great session. Cam, I highly recommend you and Gustavo and Chip stop by. It'll be a session you guys will not forget. I promise. It's my 31st anniversary session. I'm gonna give a lot of clarity to people on a lot of confusion that they've been having. Okay. Thank you, guys. Thank you, Don. I appreciate it. So, all right, let's continue. So, gold, we could potentially be seeing a little upside in gold and crude oil. Remember, crude oil, no soup on crude oil till we're above 76.60 right here. This is our confirmation for crude oil. We need a confirmation. And this is our confirmation for gold, 27.84. And you guys know my confirmations are usually pretty damn good. Uh, if you guys don't remember, let me remind you. Do you remember semiconductors? Do you guys remember me giving you a specific level right here? Somewhere right here about 5 months ago? Nothing good will happen until we go above 265. Do you remember that? Nothing good has happened with semiconductors. A few that did break out of the high, but that's about it. Good morning, Peter. Good to see you. Happy New Year's. 31 years, Eduardo. 31 years. All right, all right. Now let's talk. Let's put everything together and let's talk about the stock market. Okay. Yep, 265. And by the way, nothing changed. So to review, crude oil 76 plus, semiconductors 265. Where's the gold market? Where's the gold market? What do they do here? And the gold market 27.85. Now, if there's a gold stock that's making an all-time high, that's okay. If there's a crude oil stock that's up here or down here, that's okay. But generally speaking, don't trade crude oil, don't trade gold, and don't buy or sell chip stocks till we're above that level. All right, just heads up for you guys. Heads up. And I am expecting a lot more people to start coming in over the next couple of weeks as the year progresses. All right, let's talk about the stock market. Let's put everything together and then let's break it down, right? That's how I like to do it. I like to go in, I like to go distant, I like to go in, I like to go further. Investors are looking ahead of the minutes. That's this report right here. Expect lighter trading on Wednesday in anticipation of the holiday, which we will have on Thursday, which was totally unexpected. I don't know how the market's going to react to that, but FOMC is an important announcement, and we already know what the Fed's going to say, that things are not looking nearly as peachy as they did, right? We know that. We know they're going to say that. Things are. I'm telling you right now, the kid is hiding his bike at his friend's house because he fears that his parents are going to take it to the pawn shop. We went from them buying him an extra expensive bike to him not having the sneakers to ride the bike anymore because they have already pawned those. Yeah. Oh yeah. It's like that. So let's put everything together and then I'll talk about volatility and then I'll talk about a few other important things. So investors are looking ahead of the minutes. We have a lot of labor market data. Most of that is coming out on Friday. Tech stocks are leading with AMD and Nvidia leading right now. Chips are on fire right now. One of the reasons why chips are on fire is Happy New Year's to you too, Patrick. One of the reasons why chips are on fire is because both Microsoft and Apple came out with an announcement that they're getting hot and heavy into AI this year. And for Apple, that's the first announcement that they've had. They've been pretty neutral on AI, but I think that's really big. And that's one of the reasons why I decided to make Apple, aside from how it's trading technically, to make Apple my number one stock for 2025. Now, uh, so we're going to be looking at upside. NVIDIA, AMD, they're both looking good. Remember what I told you about semiconductors. Don't get too happy. And AMD is near the bottom, so I wouldn't even get that excited there. Friday session, Tesla climbed 8%, which is huge. If you guys remember, Tesla is also one of my top stocks for 2025, even though I cannot stand Elon Musk. It has nothing to do with it. And no, it's not political. I just don't like what he's doing. There was a big article about him in the news this week. I think it's very hard for a guy like him to run his companies. I think the best thing he can do is hire somebody who's actually qualified to run his companies, because you can't have one guy running three or four mega it's unpractical. So my reasons for not liking him have nothing to do with politics. I think he likes to BS quite a bit. Remember that cheap car he was going to make that never that we never heard anything else about it to spruce up his earnings 2 seasons ago? He likes to play the game, and I'm not into guys who likes to play loose and fast. So Tesla's up, but I do think that his relationship with Trump is going to be very good for the sentiment of the car company. ARM, Nvidia, both jumped. As I mentioned, semiconductors are seeing some upside. I told you guys how much I liked financial tech stocks. Yeah, he's doing too many things. Too many things. I told you how much I like financial tech stocks. Block, PayPal. I think that sector is in a very unique position right now. They were up 6% as of Friday. Friday manufacturing data, it was very strong, unexpectedly hit a 9-month high. Very, very good, giving us a little boost. The folks who want to take the bike away from the kid are saying we still see upside risk to inflation. Really? Then why did you lower rates 3/4 of a basis point, my friend, if you saw risk? Tell me, please. I'm curious. Do you have an answer for me? Position him in the camp of wanting rates to stay restrictive for longer. Then why did you lower rates 3/4 of a basis point and then project six lowerings next year? You lying sack of you know what. Dolly said on Saturday that although there has been considerable progress in reducing inflation, no, there hasn't. You guys have seen the PPI and the CPI. There hasn't been any progress. She's completely full of it. We have the data. Uh, no, there hasn't been any progress at all. As a matter of fact, it got worse at one point. In addition, Kugler said, obviously our job is not, no, obviously your job is not done. Obviously your job is not even close to being done. If it was done, you wouldn't be looking for the kid to pound his bike right now. We're not even close to 2%, my friend. So we're definitely aiming still to get there. Yes, but if you knew that 6 weeks ago, you wouldn't have done nothing, but instead you lowered rates 3/4 of a basis point where it was in your best interest to do absolutely nothing. And I hate to say I told you so, but I've been saying that here every single day that we've been up here. Jeff says, what happens then if manufacturing data gets revised down? It's not going to be good. It's happening this year, 30K EV. He has only 24 hours. Yeah. I mean, think about it. I find it hard to do my job. And I'm not managing three, like the biggest companies in the world. I mean, how do you do that? How do you do that? And then have enough time to get political? Come on. And I mean, I'm just talking practical sense here, right? We're all people. I know some smart people. Nobody has enough time to manage companies like that. In 2 months, they will start talking about the need to move rates back up. That's what I'm thinking, Jeff. They already are getting pretty damn close to it. And there's a 90% chance that they're not going to take any action. I hate to say I told you so, but remember what I told you so? The last thing they should be doing is lowering rates. And by the way, I'm going to give Trump some credit. Trump told them don't lower rates till after the election is over. They just couldn't help themselves. They just couldn't help themselves. We have a new federal holiday, which we need. We don't need this holiday. We really don't need this holiday. We need more trading sessions in the market. But here we are. Jimmy Carter, we're going to pay our respects to Jimmy Carter. I don't know why we just can't have a President's Day like we had, President's Day. Lincoln, Washington, Carter, President's Day, right? For everybody. Well, he's got to delegate. I mean, Daniel, Yeah, right, Eagle. That's what I'm thinking. I mean, Jesus. There's a 6-day will raise rates this year. Yep. Yep. Yeah, he's got to chill a little bit. Spend some time with like 20 of his kids. All right. We got a lot of reports this week, including JOLTS, unemployment. Investors will be closely monitoring the release of the minutes, which I mentioned to you guys is happening on Wednesday. This is a big report. This is a big report. This is a big report. This is a medium report. This is an interesting report, but this is where the good stuff happens on Friday, right after our holiday. Yes, let's not forget our egg prices. Oy vey. Yeah. You guys are funny. You guys crack me up. All right. So let's talk technicals. I told you on Friday, and I drew this line here, and I said we have to watch volatility, and I'd like to see us break this trend line. Well, we broke this trend line. We're now at the 16 level. And I told you on Friday that we have to, uh, Buddy will put a lot of pressure on the Fed to be more transparent. Uh, I don't think he will, Jeff. No, I don't think he will. I'll tell you what he's going to do. He's going to back Trump 100% with whatever Trump does or says. That's what he's going to do. Based on what I know about him, he's going to back Trump up with everything Trump says. He's not going to argue with anything Trump says. But what do I know? Anyways, we broke this trend line right here. We are now at the 16 and a half level. The next level we want to see is 14. Keep an eye on this today, because if this rally that we're seeing in the market, if it sustains itself, then theoretically VIX should be breaking down below 15. 15 is the key level. January 9 holidays to make the federal employees feel better for Trump taking over. Oh, all right. Thank you, Brian. I mean, why not just make a President's Day holiday, right? And theoretically, holidays should be great for me, right? I get a day off and I'm upset. I want to trade. I don't want a holiday off like right when the market starts. I mean, we get like so many holidays in January. All right. So you guys are going to be watching this very, very, very closely. If we go above the 17 level, the odds are we're going to hit 18. But I have a feeling today we're going to stay around the 16 and maybe even hit 15. The next key level is 14, and then we break down. But there's a lot of wiggle room here. There's a lot of wiggle room here, and I'm going to leave this trend line here for another couple of days to see whether we break it or not. But on this side of this line, we're good. On this side of this line, we're bad. Let me just extend it a little more here. Here, right there. There we go. So as long as we stay on this side of the fence, we're okay. All right. Brian, no, I don't think you're kidding at all. Yeah. Oh, he's a genius, all right, Ben. I agree with you 100%. The guy's a genius. I don't know, Rich. That's a good question. I think it is yearly. I think they've now made it a holiday. Yeah, I mean, like, why not just make a President's Day, right? Yeah, no, 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 Ben. Don't, Ben. I think he's a total genius. That's not the point. The point is, I think it's a little too much to manage Tesla and SpaceX and all those other companies and advise the president. I think it's just a little too. I think it's a little. I think he's like a little doing a little too much. That's all. Don't you guys agree that it's a little too much? Oh, so just for the year. Okay. Good, 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 good. Just for this year. All right. All right. All right. So we're going to be, let's not keep, folks, again, let's talk about factors, not politicals. All right. Let's just stick to what we're talking about here. So right here, if we go below 16, and I'm going to be watching this is a 4 hour, 2 month chart. So we're going to be watching this very, very, very closely today. All right. Very, very, very closely today. The Carter holiday is a one-time thing. Okay, cool. I can live with that. I could live with that. Uh, Jay. All right. All right. Listen, I don't want to argue about Elon Musk. We got way more important fish to fry. Okay. So volatility, we're going to be keeping an eye on. Very, very, very important. What else are we going to be keeping an eye on? Momentum levels. We only have 53 stocks trading above the 200-day and 38 trading above the 50-day. This is how it looked about a week ago. Okay. So we're not out of the danger zone just yet. We're not even close to being out of the danger zone. All right. Not even close. All right. Europe is giving us a little tailwind. China is at a 3 month low, not helping us at all. And sentiment towards China is getting more fragile. And again, rising geopolitical tension upon Trump's White House, tariffs. We all know about that. We all talked about that. How people feel, sentiment. Oh yeah, sentiment is everything. Japan lower, so we're not getting any tailwind from China or Japan. All right. And auto and retail stocks led decline on Monday. So we got to be really careful here. We are getting some tailwind from Europe, but not from Asia. Chip stocks are seeing some upside. This is really driving the market today. AT&T, which we have in one of our programs, got upgraded. The sector got upgraded. Boeing got upgraded. Lyft got upgraded. I'm really interested in Lyft and the taxi type of stocks because of the auto driving taxis this year. So it'll be interesting to see how Lyft and Uber do. It'll be very, very interesting to see. But I like the fact that AT&T got upgraded. Another financial tech stock got upgraded. It's up over 21%. Remember, I told you guys I really like financial tech stocks this year. All right. All right. All right. All right. Let's talk about sectors. Let's talk about sectors. Do we have momentum? Do we have momentum? We have 60 stocks breaking down as of Friday, not even 100. Very low momentum to the upside. What about upside? Only 38 stock, hardly any momentum. One thing we're sure of that these 38 stocks are definitely seeing strong institutional accumulation, which is one of the reasons why you've been seeing me recommending the exact same stocks almost every day here to the upside. Like EAT, for example. How many times have I recommended it? Or how about Urban? The same stocks have been going up. It's very easy to gauge institutional accumulation when everything is going down. Do you think the congestion fees in New York will hurt Uber? Yes, I do. I do. I do. I do. Also, I've been talking to a lot of Uber drivers when I drive around. And also, we used to take Uber when we used to travel. I haven't found that Uber and taxis have that much of a different rate anymore. Like 7, 8 years ago when I used to take Uber, I remember you saved a lot of money. Now I take Uber, I'm not really saving a lot of money over taxi cab fees. So I'm not really seeing any real major incentive to take an Uber now in major cities versus taking a taxi cab. Like in New York, we were just taking taxi cabs because the Ubers was exactly the same price. So I think what's going to happen is we're going to see more competition with all of these Ubers and all of this other stuff. All right. So you're going to keep an eye on volatility today. You're going to keep an eye on momentum levels. We only have 55% of stocks in the S&P trading above the 200-day moving average. And in the Russell 3000, look at this. All the Russells, 57, 53, 55, 50-day, we're below water. We need to get above the 50-day moving average. On the NASDAQ, everywhere, we need to get above the 50-day moving average. Meter versus flat rate. Yeah. Lyft actually pays their drivers a better percentage than Uber, from what I understand. Lyft used to be pretty popular where I live. Now you can't find any of them. All right, let's look at technicals, guys. Let's look at technicals. So what do we know so far? Momentum levels are in the crapper. There's hardly any stocks breaking out to the upside or downside as of right now, which means we could either be ready for a nice breakout or we could be ready for a nice false breakout, right? That's the key. That's the big question right now. So let's see what our fragmentation level is. Bitcoin, utility, semiconductors, consumer discretionaries here, technologies here. Technology next to consumer staples, never a good sign. Home builders next to communication, really? Russell 2000 next to healthcare. Healthcare close to semiconductors. I don't think this can get any more fragmented than it really is right now. I mean, you've got everything everywhere. You've got Bitcoin and semiconductors. Then you got consumer discretionary and technology. And then you got QQQ right here. If I had to put a label on it, I would say interest rate. I would say blue chips, and then I would say financials. Financials are all over the place. Interest rate sensitive stocks are all over the place. Let me prove it to you. Home builders are right here, right? Retail is right here. Why is retail right here? Interest rate sensitive. Interest rate sensitive. Not doing really well. And energy and utilities are fairly inflationary and defensive, and they're all the way up here, next to uh, one of the most speculative sectors, and next to semiconductors, which is next to real estate. Whenever you see semiconductors and real estate next to each other, or you see healthcare and mid caps next to each other, or communication next to home builders, we're all over the place. So there's very, very, very little. There's very, very. Oh, we got some feedback here. Unless you're stuck in traffic. Hey, Angie, we use a driver in Mexico. It's negotiating between. Oh, interesting. Very interesting. Cam and all the stuff, the correct downtrend now would be a good time to get into it. Assume we need to get above it. You said Apple is your number one stock for the year, but with the current down, I never said it's a good time to get in, and I also said it's probably a good time to start thinking about getting into those stocks after in the second half of the year. Just make sure you remember me hearing that part. And I also said there's a lot of stuff that's going to be going on right now, first part of the year. So I never said anything about getting into Apple right now. I said by the end of the year. I also said I don't think the stock market's going to do much the first half of the year. Do you guys remember me saying that too? And if the stock market's not going to do much first half of the year, how much do you think Apple's going to do first half of the year? It's very important to remember everything that I said, not just piece by piece. Yes, stock fetcher codes are really good. My stock fetcher codes, look, I have a lot of stock fetcher codes. Look how many I have here. But I only use like 4 or 5 of them. The rest have all been like stuff I tested before, or I use only a handful of these. Some of these go back 15 years, you know. All right. What about mega caps? Mega caps, I like what I'm seeing with mega caps. Mega caps are trading a hair above the 8-day EMA, and they're trading above the quadruple witching VWAP right here. The problem is, you see this line right here? We are in a downtrend, and this high is lower than this high, which means this has to take out this high, or at least create a new trend, which would be right here. So until we get to this level, we don't really have any soup on the Magnificent Seven. We need to get much higher because the lows are getting higher. When the lows are getting, if this was the first, if we were here, I wouldn't say that because that's the first pullback from the all-time high. But you see, this pullback is a second pullback from an all-time high. When we have a second pullback from an all-time high, we have to wait for that pullback to be filled. We need confirmation because now we have a pattern of lower highs. You understand? The first lesson I ever taught Matt, I think it was the first lesson I ever taught Matt, is pullbacks from swing highs are great. Pullbacks from second highs are not, because the more lower highs you have, the lower the odds that price is going to break out. You understand? This is a pullback from the first high. Look, we almost broke out, but now the more lower highs you get, the weaker you get. So I wanted you guys to understand the concept of lower highs and higher lows. See, we have a lower high here. If this wasn't here, then I would just draw a line right here, and this breakout would be good enough. But we can't do that because we have a lower high. Even though this is lower by just a hair, it's a lower high. Wanted you to understand my thinking. So we got to be very careful because we have 2 levels of resistance here, especially this high. We need to break above this high, and this high is at 55.63. We need to break above that level. What about RSP? How's RSP looking? Is RSP giving us some love? Well, we're starting to come up a little bit, but we're still in this consolidation. And remember what I said, if we can't get above this 100-day moving average, we're not going to see much love here. So be very, very cautious. We need to break the 100-day moving average on RSP, which happens to be right around 178.56. And on MAGs, we got to break this level. If we don't break this level, nothing good's going to happen. Now, what do I mean by that? Let me show you something. Let me show you Meta. These are the two best stocks right now in the mags. Meta. Meta is breaking out. Meta, you have upside right here. It broke out. Google, you have a clear breakout right here, as long as it doesn't come right back down. What about all the other mega cap stocks? Nope, no soup. Those are the only two. Actually, sorry, NVIDIA. NVIDIA was the first one. NVIDIA. So NVIDIA has a clear break. Meta has a clear break. Google has a clear break. The rest of them don't. Do you guys understand what I mean by a clean break? Clean break to the upside with NVIDIA leading. With NVIDIA leading. You can see it right here. Nice clean breakout. I don't like this gap, and I don't like how far it's deviated from the 8-day EMA, but nonetheless, we have a clear break. So those are the three stocks that are really, really strong right now as far as the mega caps. Capiche? You guys understand what I'm saying so far? Those stocks have clearance. The rest don't. What about the SPY? Well, remember, the SPY is 58% top 10 stocks. And we're right now lower highs. So the SPY has to break. Again, the same thing that I said with mega caps applies here. We're above the quadruple, we're above the election VWAP. Okay. We're above the quadruple witching and the 8-day EMA are like right at the same level right here. Here's the year to date. It's only been 3 trading days, but nonetheless. But you see, we have a high here, and we have a lower high, and we have a lower high. Because we have a lower high, we have to break this trend line to this side. Until we break the trend line, we don't have upside. So we got to break this. So you have a major. So Roger, are we ready to buy Meta? Well, you know what's going to happen to Meta if mags don't break through here? It'll probably stall. It's ready, but I'd like to see mega caps break through the 5760 level, and I'd like to see the SPY. Again, my job here is not to explain to you facts. It's to explain to you the underlying reason for those facts so that you can actually understand why I'm saying what I'm saying, so that you can replicate me, not just mimic me. See right here? Needs to break. If we don't break this, what do you think is going to happen with the S&P? It'll be a lower high and we'll come back down. And all of those stocks that look beautiful right now will fade away. So we really need to break this 599.51 level on the SPY. Does everybody understand what I'm saying? Does everybody understand what I'm saying? Quad witching was 20th of December. I wrote this in. I gave you guys all of this in my check the Telegram channel. Let me show you what I was doing on my day off yesterday. Happy Sunday at 11:55. This is where I'm setting the anchors to the VWAPs. Second day of 2025, 6th of November, election results, 20th of December, big option expiration date. Is there something that I said here that was not clear? We only had 1,000 people see it. Out of 5,000, 20% of people saw it. It's right there. I gave it to you for free yesterday. Free Telegram channel. All right? All right. Don't say I didn't do it, and don't say I charged you for it. I gave it to you for free. So SPY is up only 0.78 right now. MAGs are up 1.35, and RSP is up 0.61. So you could clearly see the MAGs right now have twice as much upside as 497 stocks. But these 493 stocks, are still below the 100-day moving average. We got to be really, really careful here. We got to be really, really, really careful here. Like really, really careful here. You understand why? Because you have the 100-day here on the RSP, on the SPY, you have this trend line right here. On the mega caps, we have a little room here, but there's a major resistance here. So if you're going to go long Meta or Nvidia or Google, please be careful because you have a lot of resistance right here that we have to get through. All right. What about the Dow? I hope that everybody's understanding exactly what I'm showing you, why I'm showing you, and how I'm showing it to you. Look at the Dow Jones, same thing as the RSP, only up 0.44 right now, not even 1%. Meanwhile, mega caps are up 1.44. 1.44 versus zero point 0.4. So you understand there's, again, a huge spread between the mega caps and the blue chips right now. All right. What about QQQ? Let's see. Is it broad based? Up over 1%, right above this line. Now, this is good that we're above this line, but that's pre-opening. If we right now open up right here and then just start coming right back down, all I have to do is just adjust this a hair. So I wouldn't put too much faith into that. I want to see a real breakout. I want this to be the low, and I want price to move up here. Because if price comes back down right now on the QQQ, guess what will happen with MAGs? Come right back down. So you understand, we're in a very, very peculiar position right now. We got to be really, really, really careful. We got to be really careful. On one hand, we have mega caps could really move today. On the other hand, they have a lot of resistance above us. Also, another thing I want to remind you, today is Monday. What happens usually on Monday? What usually happens on Monday? Monday's usually not a huge day. And we have a holiday week, thanks to Jimmy Carter. Thank God it's only 1 year. And I have nothing against Carter. It's just too many holidays. So it's Monday. We have a lot of resistance above us. We're up overnight, not during the session. Asia's not giving us tailwind. The bond market is now negative. The bond market turned negative in the last few minutes. Look, this is in the last 20 minutes. The bond market just turned negative. So my suggestion, how would I play today? I would be very, very cautious. I may take a little small position in a couple of mega caps, but remember, we have resistance right here. And I would wait the first hour. I wouldn't do anything the first hour today. Okay? All right. What about downside? I would say choppy to upside. I would say more likely than not choppy to upside. Not seeing too much downside, but I'm cautiously optimistic about the upside. Cautiously optimistic. Let's say I'm 30% bullish, 30% bullish, 40% bullish, 60% choppy. And I'm bullish on very small number of stocks. Now let's look at Russell 2000 real quick. Above the 200, pinched between the 100 and the 200. But I like this breakout. You have, if you're day trading, you have a good amount of movement here. So this may be a good asset to day trade today because you have a little room to resistance right here. Whereas with the SPY, you're literally right kind of pinched, but you are past this area. So again, we got to be cautious. We have a lot of overhead. We have a lot of overhead above us. A lot of overhead that we have to break through. All right. Where is info about the full-time trading boot camp? Just call customer service, Donna, and you'll get info about the full-time trading boot camp. All right. Also, here's my link for VIP room where I'll be doing a very special 31 year that I've been trading session, education session for you guys. I'll teach you one of the most important things that I've learned in my 31 years of trading. Which I've never talked about before. It'll help you clarify certain things. And here's the link to Customer Service Live. The Cam and Gustavo show. Don't miss out, guys. Be there New Year. It's important. They got good stuff for you guys today. And we have 566 people here. Post a thumbs up. I'll give myself a thumbs up. How about that? All right. So let me review a little bit and then we'll jump into our stocks. RSP, be warned. You have the 100-day moving average immediately above us. Okay. QQQ, you are right at a precipice of a resistance level or a new breakout higher. If this breaks out higher, we're going to see a nice move on mega caps. Mags are right at a point where they can break out, but we have 2 points of resistance above them. But for short-term gains, we still have some upside potential all the way up to 57.60 and then possibly to 58. So you do have some air here, air pocket there. QQQE, QQQE are you got a lot of choppiness here, a lot of choppiness, and you have you have this trend line, and you have the 150-day moving average, and you have the election VWAP above us on the QQQE. So I'm still seeing more and more upside on the mega caps than anything else as of right now. And on the SPY, we got to get past this level right here, this 599.77 level. You guys understand why? Because we're making lower highs. If we were coming off our high right here, then I would just say buy the next breakout, but it's not that easy. QQ doesn't look near as good, but broke the 100. Yes, yes. Orthodox Christmas service today. Birthday Jesus Christ. Yes, 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 yes. All of the holidays. All of the holidays. Thank you, 007. I appreciate it. Very kind of you. All right. All right. Soon we'll be getting about 600 people. As of next week, we'll probably start getting about 600 people here. All right. Now let me give you stocks that I'm looking at to the downside and to the upside. So Adobe. Adobe breaking down. Again, I would like to see it break down this level, but it's right now the year-to-date VWAP. It may just break right down. The year-to-date VWAP is this bar right here. We don't have a lot of data there yet. LYB. First time we've ever talked about the stock to the downside this year. Look at that. Compression, breakdown. Volume going higher. First time we've ever talked about that stock. Ball. First time we've ever talked about this stock to the short side. Yes, I'm being highly sarcastic. Compression, breakdown. OLN. Nice breakdown from a compression right here. These stocks are not making highs anytime soon. Pepsi, I have a star by this one, which means I really like it quite a bit. It broke down. Now look at consumer staples on Friday. Look at here. Consumer staples couldn't break down. But Pepsi broke down. All right. XP. By the way, it was 34 degrees here yesterday in the morning. 34 degrees. See this breakdown right here? We're still below all the averages. XP. Hello, hello. Best Buy. Yeah, consumer electronics right now. Retail electronics. Very choppy stock. Now, a stock like this, don't expect straight follow through. Always look at the history of the stock and look at what the stock does during breakouts. Does the stock revert during breakouts or does it follow through? This is not a follow through stock. So when you're buying a stock like this or selling a stock like that, you have to have different real expectations than a stock like this, for example, which is also on my list. What does this stock do when it breaks down? It has follow through, right? Doesn't mean BBY is a bad stock, but you just have to have different expectations and probably buy longer term option expirations. So we're right at the year-to-date VWAP, Budweiser. Remember, they're going to start putting cancer stickers on alcohol. So, I'll tell you something funny. So my wife is in Colorado skiing with Rachel, right, with my daughter. And she calls me yesterday. She's like, it's It's cold here. I'm like, well, how cold is it? She's like, oh, it's like 30 degrees. So I sent her a little message. It's like 34. I'm like, I didn't go with you guys to avoid the cold weather. And you guys are like 3 degrees cooler than I am. So I thought that was kind of funny. Anyways, ooh, nice, nice, very nice. Oh, what's the usual temp here? 60, 60, low 60s. Like today's going to be 70s. 35 low, 70 high, 60s, I would say, low 60s. Hardly ever gets below low 60s, Bob, for a long period of time. HUN, another one, Huntsman. Now, have you guys noticed the kind of stocks I'm picking? Stocks that have been compressing and are finally breaking down, but don't have a lot of distance from the 8-day EMA. Capiche? Marketing has increased in alcohol and especially Mexican alcohol products. Yeah, well, they need it. They need money in Mexico. They're scared of these tariffs. I got a couple of other ones here. KMB. I really like this one a lot, but it could be a fake breakout. See this right here? Be careful, but I really like it a lot. A lot. Make a little note here. Why? Because it's compressing and breaking down. If I'm wrong, I would know pretty quickly if I'm wrong on a stock like that. Are you guys starting to see better the type of stocks that I'm picking? Starting to get a little better feel for the market? Starting to look at things that are OLN, OLN. I think I might have mentioned this before. That's the last downside stock. Now let me give you some upside stocks. I do like Nvidia. I do like Nvidia. I do like AVGO. Beautiful A line right here. I bet you if we put an anchor, we need to wait for this to break out a little bit, but it's looking pretty good right here if it breaks out. Um, and I like Meta and Google. Now, let me give you stocks that are on my list. Compression breakout. A little overdone. I would probably wait for it to come down a little bit, but I do like it right here. Yeah, yeah. I think so, Angie. I'm not sure. Not sure. TPR. I'll take a look at Rocket in a minute. I've been talking about this stock for how long now? Geo, nice breakout. AMBA, very nice. That's beautiful. Beautiful stock. Probably needs a little bit more upside, but I like what I'm seeing here. BRZE, nice A-line breakout right now on BRZE. TSM, Taiwan Semiconductors. Notice every semiconductor that I'm looking at is all the way up, has already broken out of the high. This is way overdone right now. I would not be buying this right now. I would wait for for a pullback. And Urban, first time we're talking about Urban, right? Wink, wink. A little overdone. I would wait for it to come down to the A line, but at least we have something to look at today. And as I mentioned, I like Meta. I like Meta, and I like Google, but I'm not doing anything first thing in the morning today. And remember, it's Monday. Yes, GRRR. Remember grrr, grrr. Yeah, that was one of the stocks on our list. Be careful with this one right now. It's coming down a little bit. And Rocket. Rocket to the downside. Yeah, still good to the downside. All right. All right, guys, I got to get to work. Somebody's got to help you guys make trades. Hopefully, this was beneficial. Remember, I am in celebration of my 31-year anniversary. I'm doing a special education session today in the VIP room at noon. Uh, I highly recommend you go there because, well, if you don't, you will regret it by a huge margin. And I will give you the link for Customer Service Live. I hope this was a fantastic session. I hope you guys learned something today. And I hope to get some emails from you, roger@rogerscott.com. Hit the thumbs up button. Let's see how many thumbs up we have here before I go. We've got 251. I could live with that. Have a great day, everybody. Bye. Thank you so much for being here. I appreciate each and every one of you. Bye. Stay out of trouble, and remember, it's Monday. Mondays are difficult, and it's a holiday week again, so we got to be careful.